Hey guys, this is a quick video for everyone. This is public and free for all members of X to view. And it's going to be a quick recap on today's trade idea that I shared publicly this morning. You can see a screenshot of it. We're going to talk a little bit about the overall markets, the S&P 500, the QQQ, and some analysis that I also provided this morning. And we're going to touch on gold and we're going to touch on Bitcoin. So buckle up, let's go. So the first thing I want to say, and I say this often, if you're new to following me, maybe this is new to you. If you've been following me, you know how I operate. I put out watch lists and I'm extremely specific down to the cent, down to the contracts. And that's important because I think there's a lot of nonsense and a lot of furus that pollute the space and give real professionals a bad name. You know my professional history. It's one thing to talk about your history, though. That gets you to the dance. It's great. But the currency of your reputation is what you say, your words. How much do they matter? And say things and be clear and be definitive. On days when there's no trades, I say I don't have an idea for a trade, or I just say maybe something's on watch. I don't call an idea. But what I don't think people care for is these generalized, this could go up, and then when it takes off, called it, right? Nobody cares for that. That's nonsense. Likewise, I don't think you want to see pictures of my watch or someone's car or their face or acting cool in front of a swimming pool. I don't really wear watches anyways. I have a smartwatch, right? It's a basic smartwatch, the Samsung Galaxy. So without further ado, again, your credentials and all the other things and the fun, it's all great, but your word matters. And so I post these public lists for everyone to see. And I do a lot of my private work, which is semi-private public work with insider access, of course. So I reference that quite a bit. And what's great about that is a lot of people have joined insider access so they can hold me honest when they see these videos and say, yeah, this is what we did in insider access or not. And then of course I have my private management outside of that. So let's get started. The idea was AMD, and this is this morning, and you can check the timestamps. It's all available. I delete nothing. There's about 28,000 posts that I have on posts that I have on X. So if by now you can't go through that and establish who I am and what I've done and my credibility and my all sorts of other information, then I don't know what to say. But 120.85 is the idea. So how to read these, again, what it means is that once we get to 120.85, I like to enter calls. The idea is 124, 125 on the option side. 125 was a little bit more, 124, sorry, was a little bit more viable today. And I talk about that. And then I talked about how the markets are in a sideways range right now. Unlikely to see a breakout range, but some volatility is likely. And we'll talk more about that in just a moment. So let's get to the trade on AMD and take a look, right? Almost perfect to the penny. Entry here, you're not going to stop out. It only drops 6 cents. A little bit of consolidation here, but we do get a breakup that is sufficient to take a little bit of profits. And then we take off, we rocket, deep profits, more likely if runners. And just another fantastic trade. I've been talking about this frequently, saying we are on an absolute hot run on X. And how do you verify that? How do you know it's not nonsense? You go back and look at my posts. I keep wanting to say tweets. Just go back and look at them. Look at the ideas. I post them in the morning. I have no ability to go and change anything. And when you do edit things, it shows. Go check everything. Hold me to my words. Hold me to my explanations. Again, accountability is everything. And part of why I decided to open up an X account, it was Twitter at the time, is because I got sick and tired of this, the furu nonsense and misinformation and garbage sort of opinions. People just kind of scamming around. Put your words out there and your work out there. So how did this work on the options side, right? That's what happens to the stock, but not trading the stock. How about the options? So 124, right? You get a good entry here, 54, maybe hit at 55. You get that spike up to 68, more than 20%. You want to take some profits. I think that's a smart thing to do. I talked about adjusting up to at least break even, right? 54, break even, maybe get into 55. You adjust your stops up and sort of manage your risk. That's always the idea with me. Manage your risk, be responsible, trading as risks. What if it runs against you? You want to be able to stop out, take your exit, protect your capital, and live to trade another day. I say this often. Great traders, people who are successful in investing, and this applies to trading, this applies to everything in your life, aren't people who can get big hits and big breaks, right? Whether it's a real estate deal, a business deal, any other deal, it's people who can do that with avoiding getting absolutely trashed. And I think that sentiment is shared by now the late Charlie Munger, so I just wanted to mention him respectfully today. And so what happens here? 55, 54, you get a strong move up, right? Like I said, you maybe take some profits here. The way I'd play it, and I like is you get a strong move up to about 85. you're going to take some profits here on this dip back because you're getting a 15% plus dip back. That's okay. You scale some size out. What if you don't have a lot of size and you closed out your position? That's okay. Don't worry about the peak. Don't worry about it getting exactly to the peak. I hate this furu talk of, oh yeah, I entered at 54, exited at 94. You entered perfectly to the penny and exited perfectly to the penny. This entry, yes, that's perfect. Why? Because our entry point was perfect. But the exit, right? My protocol is such that, you get about 10, 15 ahead, you start adjusting stops and you sort of scale out. So there's no perfect point at which I say it has to be perfect. Don't worry about getting perfect, right? If you go based on protocol, you would add 20% minimum, and then you kind of scale up as you go, right? Maybe you had a worse entry and you hit break even. Scale up as you go, take some profits. And if you got size, you let them run, and you could run up to 94%. That's a huge move, right? So that is a great move, and that was the anatomy of the trade. You see it from here to here. And I want to talk about a couple of other things really quickly. What else did we say? When we come back to it, I noted markets are unlikely to see a breakout of range, the recent range that we've been in, that's the markets. But markets are in a sideways range right now. Unlikely to see a breakout, but volatility is likely. What else did I discuss? Well, again, and you can check this. I said, also, this is what we have on deck. I made special note of this. We have a slew of Fed speakers not named Jerome Powell, because that's important. Consumer confidence. And I note these because, and I actually distribute this the week before, because if you're a professional, you're not staring into the clouds, taking selfies and talking about yourself and glamorizing yourself. You're focused on the data and what impacts the market, and you have experience. You know some of the things to look out for. And actually what I've advised many of, and insiders in private work, as I've said, my feeling is that we will see a little bit of volatility and spiking and dropping this week, of course, as we see a slew of different Fed speakers coming out. I shared that this morning for everybody to keep their eyes on. This is a X post. I'll try to remember to say X. And so what happened? Again, here we were. Volatility is likely, market sideways range. Well, let's take a look at the S&P 500, right? Let's take a look. What do we get? We closed slightly above yesterday's close, right? The change was not dramatic. We saw a big spike. Actually, I'm going to pull back to the SPY here just to give a better look, right? And this was actually a rejection line we had, but didn't quite hit. Closed just a little bit above, right? 45 cents. But what did we get on the ride? Lots of volatility, but we didn't break the range. How do we know? So I'm going to go to an hourly. Here's a recent range, right? This is that sideways range we've been in. What did we say? What did I note this morning? Again, hold me to it. Markets are in a sideways range right now. That's not wishy-washy furu talk of, this might happen or that. Unlikely to break out of range, but volatility is likely. We didn't break out of the range, right? This was the range. But I would say this qualifies. That's volatility. You can't call this any other way. That is volatility. So we're dead on with the markets. And the reason that's important is not just to pat myself on the back and say, hey, I'm the pro in the room and I'm great at this. Is to also say there are days where you're going to get sideways action, but volatility is what creates opportunities. For example, I wasn't trading SPY today. I didn't have a call out on SPY specifically. Didn't quite hit the rejection. You could have worked that zone as an insider. But if you were trading SPY, this is a phenomenal opportunity. I mean, if you walked away and somebody said, you got a 200-300% move on SPY and someone else looks at it and says, what are you talking about? It closed near open. Well, you could be dead on, right? Because had you played calls or even puts, it could have been a fantastic move. But a lot of the sideways action is very difficult to get in and sometimes just safer not to engage. Still, the analysis from the morning, and I shared that publicly, was dead on. It's something that's doing well. So equity classes. I want to touch briefly on Bitcoin, and people are asking what my thoughts are. We shared this within Insider Access. So within Insider Access, and I'm going to bring this up, I have a little bit of it redacted here, and I'm going to touch on gold really quickly as well. Within Insider Access, and I blur some of this just because some of this is our analysis, and sometimes we actually ask questions with the emojis, and I give little answers like a thumbs up, buy, sell, that sort of thing. But this was something I posted a little while ago as a follow-up to our previous trades. We had an entry on the breakout at 27,500, right? And we see dips. We saw dips as an opportunity on the heels of this news, right? So I don't mind. I'm sharing this. This is from the 22nd. You saw CZ was there. Shangpeng Zhao. Hopefully I got that right. Got in some hot water and some issues. But I gave my analysis that I think this actually serves to greater stability because we're able to weed out some problematic players here. and it was a buy dips. But the entry idea was 27,500. That was our breakout entry. That was, I believe, at the end of September. And here we are today, 38,157. So is this just a cool promote insider access? No, let's talk about Bitcoin. I actually shared some of my analysis here and saw an opportunity. At this point, just going forward without giving specific projections, that is something I exclude to insider access. What I would say is that I think that in the near term, Bitcoin obviously has good momentum, and I think gold, there's a little bit of coupling there for these sort of equity classes. I think they'll move with the markets, but there's an appreciation on the idea that the rate hiking cycle has come to an end and financial conditions are easing. That, to my view, is productive and constructive for Bitcoin and for gold and equity classes in general. What I think we'll see in 2024, buckle up. As you know, 2024 has some dangers here with a potential recession looming. I think we'll see a little bit of a roller coaster potentially with Bitcoin, but ultimately we'll see a decoupling of Bitcoin from the indexes, and we've seen that before. I think 2024 is the breakaway year where I'm not saying Bitcoin moves up or giving any specific ideas here, but I think it will decouple from the markets. Now, gold, for those who are interested in gold has done fantastic, right? And gold is an insider access idea. Again, this is something that we were moving on. We not only hit the breakout on Bitcoin from 27,500 to now 38,000 plus, as you saw in that screenshot. And again, insiders will watch this and they'll let you know if I'm lying. What we saw here was our entry idea. It wasn't those entry ideas back then. Maybe I could do it better like this. Yeah. This was our entry idea. Why a weird number like 182.23? Well, it's because that's where it opened at, right? So the email and the notification went out the evening before, and I said, at open, we could just grab it right at open. So I'm going to zoom out. 181.90 was previous idea if we got a pull back there as well. And so this has been the run, just gap and go, gap and go, gap and go, hit. And so how has that worked? I'm going to show a quick screenshot as well. And this is from this morning, 8:30 a.m. I started it. I get it. I know I'm cheesy. I'm short on personality, but my skills are in analysis and technical work. So not a great deal of personality. We're not just good, we're golden. I took that line from a cereal commercial I remember seeing as a kid. I ended up looking it up. I can't remember it now. I think it was Golden Grams or something. So much for my personality, right? But I noted to insiders the same thing that I put publicly. I said a slew of Fed speakers I think we maintain in range for the most part. Then I talked about some general ceilings and rejection points for SPY and QQQ. And I maintained the view from our insider email the last evening. And I posted the screenshot of gold. Obviously, a lot of happy responses here, going really well. And I want to pivot over here and take a look. So how has that worked out when you're trading options on a big move like this? It's actually been fantastic our way. So my timeline, right? You could say it could have been even bigger with a shorter timeline. My timeline was 2 to 4 weeks, right? So I'm not going to pretend that I said, no, take a daily there's no daily, but take a weekly. So 184 was probably the right place to move, right? Because I like to get those 85 ranges. And here we're going to go one day, right? So this was on November 20th is when we initiated the idea. So I'm going to go back really quickly. November 20th, right? That's where we had this entry point to move up here. So from November 20th on a 2-week time horizon, start at 85, the move to 535, and that is a 578% move. Now, 85 is actually high in the range that I usually explain, and you could take anything for this, and I explain that to insiders. You can go deeper, you can go more secure, you can even go underlying if you want. The other move for options would be, I like the 40 to 80 cent range. That's in the options book that I have, and I've explained it several times. I like that 40 to 80 cent range. But for a swing trade, you usually go a little bit deeper, but I'm just giving examples. If you went with the 57 cent, now 446, right? And so that constitutes a 667% move. So it's been a huge move up for gold. And I think those equity classes are benefiting particularly from the easing conditions and looking forward. But you know that gold is also often positioned as a hedge, and Bitcoin is sort of taking on some of those same characteristics as a hedge against market volatility and uncertainty. So it certainly pairs well as you see investors make that move, because I think looking forward, we see easing financial conditions, but also the threat of a recession. And I think those two factors pair well for this sort of underlying premise as to why investors like to invest and hedge into gold and or Bitcoin. So I hope that analysis on the market was really helpful to everyone. These are just some of the trade ideas we had within Insider Access, but I was able to analyze, provide a little bit more on the market. So when you see me give some notes, talk about range, talking about Fed speakers, all of these items are important, right? You can't just be zealots to, technical analysis. Well, no, today what shook the markets was we had Waller come out and say, look, the coast seems to be clearing up. And then daily later on, and the coast isn't so clear. So we got that volatility, but that was expecting. It's analysis, and that allows you to combine with things like technical analysis, understand the fundamentals, macro, understanding different asset classes. Because even as the markets did this, right, gold did that. And we actually had a trade idea from Insider Access yesterday that you saw some people post about, and Fidelity continue to do that. So different asset classes, different setups. Some of them will move with that volatility, and you can anticipate it, combine it all together, be a better trader, focus on the markets, right? There's no silver bullet if all you have to do is follow the VWAP and you make a lot of money. But if you're disciplined, you respect risk, and you approach the markets in a calculated fashion, that dramatically improves your chances of being successful. All right, guys, I hope this was helpful. We'll talk soon.